Hey, Made in America listeners. Whether this is your first show or you've been with us for 5 years, thank you so much for joining us. Please spread the word about what we're doing and the great things that are happening in manufacturing with somebody you know.
Hey, it's Ari. Welcome to another episode of the Made in America podcast. We got an interesting and a fun one for you today. I'm with Jeff Rossi, Managing Director at CBIZ. Jeff, man, thanks so much for coming on.
Thanks for having me. I'm so excited. I'm a huge fan. So many of my clients have sat in this seat. I'm just grateful to be here. Thanks for having me.
Jeff, I'm really glad we got to make this happen. The audience doesn't know, but man, between illnesses, directional issues, man, this thing almost didn't come to pass, but I'm really glad that it did. I know we were trying to get this kind of more to kick off 2025, so it'll be a little bit still first quarter, so that'll be good. But really excited to have you on today. So just to set the table, for the audience here, this is going to be a bit of a different episode. We've spent most of the time over the last 3.5, almost 4 years. Oh my gosh, what am I saying? It's almost going to be 6 years. Last 5.5 years, we've spent most of our time with manufacturers, which is where we should be, sharing best practices, educating on the public on what all is still made in the USA, as well as the great careers and opportunities there are in manufacturing. We've spent some time with manufacturing peer groups, and we spent some time with manufacturing supporters. But what we haven't really spent a lot of time with is in sort of the services behind the scenes that can help manufacturers do what they do better. And that's kind of firmly where you sit.
Yeah, I spent 30 years serving the manufacturing community. I grew up in it. My mother was a controller at a Carby Corporation, actually in Watertown, Connecticut. She did their books for over 2 decades. So I grew up on the shop floor. I love to see how things are made. When I went through college, I knew I was going to go into accounting, and now I get to give back to the community that I love so much.
Yeah, that's really awesome. Let's pull back a little bit but before we get into sort of what we came here to talk about, which was there's some real opportunities for manufacturers to look at ways to improve their bottom line and get more with what they're doing, and that's so important, right? I mean, just to set the table on that, and we'll circle back to it. We live in a competitive world. And so we're not just competing with the companies in the town next door. We're not competing just in the state next door and other parts of the country, although we do all of that, but we're competing with other parts of the world. And so looking everywhere we can to find opportunities to save money and improve the bottom line without having to increase prices, I think we got to take advantage of. Is that fair?
Absolutely.
You see those pressures out there?
It's competitive pressures. It's global market. A lot of our companies and clients here in Connecticut are facing those challenges. I've been blessed. My portfolio actually is primarily in the Northeast, but I do have clients in North Carolina, South Carolina, Atlanta, Florida, South Dakota, Texas, California. I do a lot of work for private equity sponsored portfolio companies, so they bring me wherever they go. So I get to see a lot that happens all around the country. And the pressures are the same here in Connecticut that they are in the other states as well. It's real.
Yeah, so having that perspective, I think, is going to be really interesting, and I'm really looking forward to you sharing. I think we came up with 6 different concepts that companies could take advantage of to improve their bottom line. In most cases, just doing what they're already doing, but thinking about how they manage it differently. So I look forward to getting to that. But you started to talk a little bit about your experience, but I think it's important to really set the table of where you're coming from and how it is that you know so much. So you talked about kind of your background and growing up with some shop floor experience, but I think you're an accountant. So let's talk about that journey. When did you get started with that, and what's your passion for that like?
So I started in 93, right out of UConn. I started at Coopers and Lybrand, spent some time there.
That's a blast from the past.
It is a blast from the past. All my PwC alumni listening. And then went over to a regional firm, Hagalong Barty in Glastonbury. That firm merged with J.H. Cohn in 2007. And then that firm merged with the Resnick Group in 2012. A lot of mergers in the industry.
Yeah.
You can't pick up the newspaper without seeing a merger or two. And then stayed with Cohn Resnick through 2022, made a migration over to Markham in 22, and then Markham just did a merger with CBIZ. So 4+ mergers in my career. But really, it's nice to be at CBIZ. CBIZ is the 7th largest firm in the country with a very large national and global presence. And it's a lot of fun to serve the manufacturing community under that umbrella.
So, I mean, in your role kind of personally, what are you doing right now at CBIZ?
So I wear 3 hats at CBIZ. One on each ear, and then I balance the other one on the top of my head. One part of my career is just a full portfolio of industrial-based clients that I serve on the day-to-day basis as their audit partner and their advisor. Another role is I run the entire New England practice for the consumer and industrial group. And then I also lead the transaction advisory service group that covers all of the buy and sell side activity that we manage through the firm for New England. So it's a lot of fun. I mean, the bread and butter of the practice is serving the industrial clients. Most of the M&A activity these days is in the industrial space, but it's just a ton of fun to see the acquisitions, buy and sell side that are happening in the market today.
So, I mean, we know each other a good bit kind of off camera. We see each other at a lot of the same events. Where do you get your like relentless energy from? I mean, anyone that knows you, you light up a room, you've got $1 million smile, you're always bringing the positivity, always having the energy, balancing 3 hats or 17 hats, whatever it is, you're always bringing it. Where does that come from?
Yeah, for me, work is not a 4-letter word. I love what I do. I love getting a thank you from a client. Like it's all comes down to that at the end of the day, or kind of helping a coworker advance their career. I don't know. I don't drink coffee. People say if I did, I'd be explosive. And I don't drink alcohol. So I don't go down. I don't go up. I just love what I do. It really comes from my heart, from the passion that I have for helping others.
Yeah, no question about that. And what kind of, I mean, over your career, what size manufacturers have you worked for, and what size do you tend to work for today?
Yeah, so I've been blessed. Like I've learned so much by running the entire capital stack from the startup, one machine, husband, wife, starting out in the garage, all the way up to multi-billion-dollar global enterprises. I'm really blessed today that in my portfolio, I have everything from the startup all the way through. And that allows me to see what's happening all throughout the globe, a bunch of different verticals in the industry, aerospace, defense. I have chemicals, I have molded plastics, I have really specialty manufacturers that a tier 1 auto that's really global. It's just so much fun to see the difference amongst all those industries, amongst all the verticals. But one thing that is in common, which is the heart of why we're talking today, is the challenges that they all face. Cash is king at the end of the day. It's very competitive. So, I'm really excited to dive into how organizations can improve their bottom line and drive some value.
Made in America is proudly presented by Compass MSP, the premier IT services provider. The Compass MSP approach blends our exceptional standards, dedicated people, advanced tools, strategic policies, and innovative techniques, offering a distinctive solution for managing our clients' IT requirements. Discover how Compass MSP can enhance your operations and strengthen your security with our comprehensive IT-managed, co-managed, cybersecurity, and compliance services. Visit us at compassmsp.com.
Yeah, so let's talk a little bit about that. So, I mean, when you think about from a manufacturer's perspective, do you feel like that sort of cash management and how to manage capital is equally important on all sizes and scales of the businesses that we talked about?
Yeah, it really is. Like right now, we've got the potential for tariffs being disruptive. Most manufacturers run on commodity, whether their alloys are of one sort or another. So there's always been some level of disruption in regards to global markets and commodity pricing. Sometimes the customer supplies the materials. Sometimes my clients have to buy the raw materials. So they've always had to manage cash flow. And inventory for manufacturers is at the heart of cash flow. A lot of money gets tied up in inventory. So manufacturers have to really stay close on that. Years ago, everybody moved to just-in-time and lean and all kinds of Six Sigma. I think today, manufacturers are really focusing on inventory more than ever.
So talk about that a little bit. Is that really, I mean, it's funny. I try and like the show is really geared towards manufacturers and many of them kind of know it, but I also try and bring some folks who are maybe just sort of manufacturing curious, along for the ride. And for those just very, very quickly, for those that aren't in manufacturing and maybe have been more used to like the service business or more of those like technology businesses that have less to do with sort of hard inventory, why is inventory so important to manage in your business?
Yeah, for manufacturers, depending on the size and scale, some manufacturers have the mentality that they're going to make it and put it on the shelf, and then when the customers call, it's ready to go. They're real-time service to their customers. Others manufacture it based on their positioning in the supply chain. You move up to tier 1 auto, tier 1 aerospace, defense, everything has to be delivered according to a schedule. There's very significant penalties if you don't make schedule. So you have to kind of manage when the product's coming in, when it's getting worked on, how it's flowing through the shop floor, and when it's ultimately getting delivered to the customers. And all along the movement in the product cycle, there's cash that's being expended, cash up front to pay for the raw materials, cash for labor, lights, overhead, the machines, et cetera, that run into the shop floor. And then if you're warehousing it, it's the cost to carry. Most of my clients don't warehouse much. It's kind of going out the door as soon as they're done these days, which is great because then it's turning it into a receivable and it's turning it to cash.
Yeah, because look, from an inventory perspective, from the moment I buy that inventory until someone pays me for the finished product, that cash is locked up.
It's locked up, and in some cases, today's interest rates, you're carrying the interest burden as well.
Yeah, and then if you have to warehouse it or store it, not only is the money tied up in the inventory itself, in the inventory, right? Could that be raw materials? It could be finished product and anywhere in between. But now you've also got to pay for the building. You got to pay for the property taxes. You got to pay for the heat. You got to pay for the lights, someone to manage it. So inventory management is hugely important from a cash flow perspective.
It is, and we actually work closely with our clients to really understand that there's some benefits that are inherent in the IRS code. For most people, their inventory is managed for net realizable value for financial statement or GAAP reporting purposes. What happens on the IRS?
Can you say that in English?
I can. I'll break that down. So generally accepted accounting principles.
Yeah, exactly.
So a little geek speak there, and I went a little fast. But
that's all right.
The premise is that you have to have your inventory on the books.
Yeah.
At the net realizable value, which means most of the time you have to analyze it. If there's any slow or old or obsolete inventory, you have to put a reserve on that. Mm-hmm. We work with our clients very closely because the IRS actually allows you to report your inventory at the lower of cost or market. So if you go in and specifically identify, and sometimes it takes some time, but you specifically identify on a part-by-part basis what the market value is, you can write it down and take an immediate tax deduction. If you're just setting up a blanket reserve, you don't get the tax deduction until you either sell the part or dispose of the part. So it's real-time conversion to cash by taking advantage of the lower cost of market.
So sometimes just spending a little bit of time to figure out what's my inventory worth, you could actually get a current year tax deduction, which is real cash back in your pocket, and the inventory that you had stays the same. So no physical movement. It's just a realized review of the paperwork and take some cash, put that back in your pocket.
Yeah, I have a global supplier to the construction industry that just became a client of mine. We went in and looked at their inventory on a global basis. At the end of the day, applying the lower cost of market turned out to be a $400,000 adjustment. So it's pretty significant. The tax benefits of that in their world was $200 of cash. Tax went down by $200 at the end of the day. Cash went in the bank.
That's great.
So a little bit of time, a little bit of effort, real money.
Real money. That's what this is what we're talking about. And then that real money now becomes money that you can use to either reinvest in the business or just generate more cash flow for that particular year.
Pay down debt, save the interest. It becomes multiplicative.
Absolutely. So opportunities for inventory management. Anything else on the inventory side that you see manufacturers should be thinking about? Yeah.
So on the inventory side, there's systems, right? Everybody, you're in this world. You want to, the Internet of Things, like real time. I see a lot of clients investing a lot of money in technology to help manage the inventory. I'm really excited about where things are going there. Some companies adopt it sooner than others. But I'd love to walk through a shop floor and see everything tagged and barcoded and nice and neat and orderly. The level of precision that the information systems flow back to management in regards to real-time decision making is so technologically advanced these days. It's great to see.
And so were you seeing people getting value by investing in those systems so they know what's really out there?
Significant value.
Yeah. Well, we love that. We love that IT. Anything else on inventory that you think manufacturers should be thinking about from your perspective, or move on to a different topic?
I think that covers it.
Okay, cool. There's another big item, I think. So we got a few things we wanted to cover today. The inventory management was hugely important. We also want to talk about some tax incentives, some grant opportunities, some M&A stuff, and the R&D credit. So I want to kind of save the R&D credit for a little bit because I think it's a huge opportunity there, but I want to be able to dig into it and focus on it. So let's tick off a couple of the other things real quick.
Let's talk about grants for a moment. We've had some folks on before, both from from the state perspective, from import export, from a federal level, as well as some nonprofits like CCAT. Talk from your perspective what you see as opportunities for grants, both maybe local in the Connecticut level where you are, and maybe some broader if there are any to share.
Yeah, there's so much that's available. Great state of Connecticut in regards to manufacturing support. I know, Paul runs around the state like the Energizer Bunny. I think he actually has more energy than I do. And our good friends at CCAT, right? Connecticut Center for Advanced Technology, Ron Angelo and the whole team. Back in the spring of 23, we ran a forum titled Money for Manufacturers. And that forum, which you moderated a panel on, was the beginning of kind of the educating the manufacturing community at a whole nother level in regards to the grants. On the CCAT or Connecticut Center for Advanced Technology website, they have an entire section dedicated to the grants that are available. Manufacturers don't realize as they make investments in interns, there's money available. As they make investments for technology, there's money available. As they make investments in new equipment, there's money available. There's a lot of money available. It's great to see so many of Connecticut manufacturers taking advantage of that. It's great to see the support where those buckets get replenished, and on a real-time basis, they're actually getting increased. So the state's definitely supporting the manufacturing community with real dollars. There's other incentives out there in regards to expanding your headcount. There's all kinds of loan programs that are available for manufacturers that people don't know about. If you're a growing business in Connecticut, specifically in the industrial space, and you're increasing your headcount, you can have you can borrow from the state, you can get loan forgiveness as you increase your headcount. That's real money.
Yeah, it is real money.
It's like free money at the end of the day. It kind of circles through the system, obviously through growth and tax dollars, but Connecticut is so supporting, and those programs are so valuable for our manufacturers to grow.
Yeah, no doubt. I think you're great to go to those things. And the last thing I'll point out there, just to put an exclamation point on what you said, is they're really easy to get. And I think that's something that people often overlook, right? They get this idea, I got to get a matching grant, or I got to get this thing. I'm going to spend, 1,000 hours in paperwork and filings to get there. Yeah. Not the case. Yeah. It's very, very easy to prove, easy to get. And there's someone there to help you on the other end. So you're not even all there by yourself. You've seen a lot of your clients taking advantage of that?
Yeah. Like I said, when I first walked in the room, I look over his shoulder. I see a bunch of the mugs behind you for clients. I can name a few. Like Brittany Isherwood at Burke Aerospace is a wonderful example. Brittany worked in conjunction with the folks at CCAT, went through some of the programs available, transformed the business by taking advantage at the right time with the right funds available and the right technology implementation. Bead Industries, another one, Jill Mayer, is taking advantage of some of the programs. Habco, our friend Brian Manzanari over in Glastonbury, some shout outs there, but all of them have actually taken advantage of the programs, and it's been transformative for their business.
Yeah, no doubt about it. We've seen, and I can name, dozens more that I know that have taken advantage of it. Those matching money, and look, it could be as little as $5,000 or $10,000 to help you get started with, some security IT stuff. It could be as much as hundreds of thousands of dollars for equipment, worker retraining, real money to take advantage. And to your point, grants are free money. Let's talk a little bit about tax incentives. I know tax code can be a little bit boring, but let's try and spice it up. If anyone's going to be able to make taxes interesting, Jeff, it's going to be me and you.
Let's
take on the challenge. So what are some of the tax incentives that manufacturers have available to them to help improve their bottom lines?
Yeah, one of the big ones that gets overlooked, and we're going to save the R&D for last because that's a big one. Cost segregation. I put that out there as a term. A lot of manufacturers continue to do facility expansion. They need more room. They're buying more equipment. A lot of companies don't realize that you don't have to take the entire cost of the new facility and run it over 39 years. For tax purposes, you actually get to segregate the entire spend. What is structural and what is not structural? Every electrical line drop that goes down to a machine, every airline drop that goes to a machine, the crane that moves material throughout the shop, all of that is going to be deemed equipment. Uncle Sam allows us to take accelerated depreciation on that. We get to take 100% in some cases, which that's a gift, right? Buy it, write it off. It's a gift. Or 7 years is really the typical life. So if you look at taking a deduction over 7 years versus 39, it's a real advantage for companies.
Yeah, and this is just another example. I think one of the things we've seen kind of over and over again with some of these programs, which I think is so important, whether it's the inventory management, whether it's some of these grants, and now this depreciation on tax incentives you're talking about. A lot of this is work that can be done with sometimes no effort or extremely low effort, or just a little bit of effort, right? So some sort of paperwork shifting. Yeah. And I think the accelerated depreciation is one of those that's like super low effort, right? It's sort of looking at a building, just taking the list and boom, have your accounts just like help you accelerate that.
Yeah. For the cost seg specific to meet the IRS standards, we have actually engineers on staff that go through the spend and go through the kind of the prints. And then we kind of make it so that it's defendable from the IRS. We don't want to make everybody so happy with this wonderful tax benefit and then have Uncle Sam come in and beat it up. So we want to make sure we do it right from the beginning. So for the cost seg, it's a little bit of extra lift, but the benefit is far outweighs the cost or effort.
Yeah, no doubt. Anything else on the tax incentive side that comes to mind before we?
The big one. So we covered the inventory. There's definitely tax incentives in the inventory if you apply the lower cost of market from a tax perspective. There's the few ways you can cost your inventory. I don't want to get too geeky here, but you can go under FIFO or first in, first out, or LIFO, last in, first out. If you're a company that has significant rising costs, exploring the LIFO could have accelerated deductions from a tax perspective. That's a little bit heavy on the geek side. So I just floated there as something that needs to be explored.
And so just let's kind of jump into a couple of the other items. Let's do R&D and then let's talk about M&A a little bit.
Okay.
So the R&D tax credit is something that certainly I've been able to use in my business. And before you and I spoke about this will kind of piqued my interest of bringing on this episode was I didn't realize the huge advantages that manufacturers can take. So let's just start with R&D tax credit. What is it? Just conceptually, the idea is to help spur innovation by allowing us to write off research and development activities. Is that a good summary?
Yeah, that is a great summary, and that is the most common conception of the R&D credit. However, it's deep, and I'm not going to go into the ultra geek speak, but I do have some points. I may unfortunately read.
You got to get a little. I think we got to dive a little bit.
I may read in a little bit here, so I got some notes here because I'm not the firm's expert. Right? We have an expert that does nothing but this. So the research and development credit is often thought about as individuals in a lab with white coats developing new product, and it's actually far from that. That is some of it. However, it's an activity-based credit, and what that means is the final outcome, and I'm going to read this direct because this one really, it was so resonant to me. The final outcome, whether it be success, failure, sale, use of a product, it's not relevant. As long as the activities performed, in manufacturing, that could be prototype number 1 or prototype number 10. So there could be significant time, energy, and cost in the manufacturing environment that goes into activities performed. If those activities require experimentation to overcome technical uncertainties. Almost everything that's done in the manufacturing environment is to overcome a technical uncertainty. I mean, most of our clients are doing things that are down to the 1/1000th, of an inch. You can't even spike it out with a micrometer. It's less than a 100,000th of a blade of your hair. It's especially in aerospace, everything has to be perfect, and we want it to be perfect. We fly in the sky, so
we sure do.
That is a definition that most people don't realize. When we sit with our manufacturers, when we explore what they do, and we speak about their research and development credit, that whole prototype process is something that it's not always developing something new. Sometimes it's just simply process improvement. As new technology gets implemented, as new machines get purchased, as different strategies get employed on the shop floor to make a product better, faster, sometimes even less expensive, all of that can be captured and it becomes very significant.
Made in America is brought to you by Compass MSP. As a national leader in cybersecurity and IT services, Compass MSP is dedicated to helping businesses like yours achieve a competitive edge through the strategic use of IT technology. Our mission is to support you in reaching your business goals, and we are committed to being your partner in this journey. Visit us at compassmsp.com.
So to put it in some like manufacturer speak, what are some of the things we should think about that we could look at putting and getting an R&D tax credit for? I mean, you talked about sort of, let's call it like sort of first article creation. So I get a new contract or I get a new part change, and now I've got to retool and I've got to get everything ready to get this new part or a new spec of an existing part. The effort and time I put in to figuring out and making that happen, R&D tax credit capable?
R&D tax credit, absolutely capable. And the biggest cost that most companies have is the payroll. And part of the R&D study is to analyze the payroll and figure out exactly what hours are being expended on those activities. And then those hours and the cost associated with hours, inclusive of benefit, is getting captured so that you can maximize your credit and maximize the benefit. And all within the confines of the IRS regulations.
Yeah, exactly. Yes, everything's above board, no doubt about it.
Everything's defendable.
What about things like I want to put in some time to run like a lean program, or I want to do some like Kaizen events? R&D capable?
So, sometimes they're R&D, not all the time, but we really work with the client to understand the purpose of the activity. And if the purpose of that activity, I'll circle back, is to overcome technical challenges.
Okay.
Absolutely. R&D eligible.
So overcoming technical challenges.
Technical uncertainties.
Spending time thinking about redesigning the flow of where my machines go on the shop floor and flow of parts. Is that
sometimes yes, sometimes no. If it actually gets implemented, then yes.
Okay. So if I'm designing something and I don't do it, then I'm not going to get it. But if I do it, probably I can get it.
Yeah. If you actually implement it, it becomes more real.
Got it. So
otherwise, we know a lot of owners would sit in their office and think about it all day.
And does the person have to be sort of full-time doing R&D work to get the credit?
Great question, Ari. Great question. Absolutely not. It can be, we capture right down to the hour. Whatever time is expended, we can capture. It doesn't have to be a full-time position.
So if I'm someone on the floor that's normally producing, but I spend 2 weeks or half a day or whatever it is on this part, boom, I can capture that.
Yeah, a lot of times it's actually shop floor labor that, like the tool and die makers, the shop floor, a machine by machine, hour by hour basis, as a prototype is traveling through the shop floor, all of that time gets captured. And that's something that a lot of people don't realize. It's pretty powerful for manufacturers. Real-time story to kind of resonate. And this is a home run story, obviously, but we have a company here in Connecticut, really great tier one manufacturer, $3.7 million of R&D credit benefit after we got in and looked at the books. That was the current year. And it was also, so a lot of people don't realize, but you can go back to the prior 2 years, amend the tax returns if the credit hasn't been taken or hasn't been taken correctly, and capture all of that. So it's very
if I start
powerful.
now, I can go back 3 years?
If all the facts and circumstances check the appropriate boxes. You can go back.
Yeah, everyone's always tested. Of course, the accountant in you, the ticking in the time. I got it. So
I have a lot of friends in the legal community.
Yeah. We tick in time.
Yeah.
We can go back. 3 years.
do.
You said 3.7 million in credit.
In credit.
So I'm not looking at a deduction of 3.7, but that's $3.7 million of value.
You are a secret CPA. You're like closet CPA. Absolutely. So business owners, deductions, you get the tax rate. As a credit, it's a dollar for dollar reduction. And guess what? Connecticut loves the R&D credit. Connecticut is one of the few states that actually allows at the state level for that R&D credit to apply.
So you get to reduce your state taxes as well as your federal?
Federal and state. Connecticut has it apply.
Wow.
It's real.
That's extremely real. So, what size revenue business are you talking about that got is this like a $50 billion business that got a $3.7 million?
Range, just so we give you a range, so we identify the client, between 50 and 75 million in top line.
So let's just use 60 because it's close to 3.
60 is really close. You are a good guesser.
But I'm saying 60 is close to 3 so if you got a $3 million tax credit on a $6 million business, that's a 5% increase to the bottom line, straight in
cash
1 year for just doing nothing.
3-year capture. Not all of it was 1 year, but yes,
Right.
Cumulatively, real money, 5%.
Right. So if you divide that over 3 years, you're looking at 1.75%, just in straight improvement in profitability just off of capturing
what you're already doing. That's powerful.
Yeah, real cash.
Yeah. What's the level of effort a client has to put in? Because that's the secret. It's like, because some of this stuff.
You have done your homework. You have studied. You have studied up. So there is effort involved. There's an expert on our team that goes out and actually, to make it defendable by IRS standards, does a formal study. That formal study involves taking some of management's time, understanding what the company does, understand what everybody in management does, because we capture their time too, and then going down to the shop floor level and actually understanding how things flow through the shop floor, who's spending what hours, and like meticulous documentation of our understanding of the process to memorialize all of that to maximize the credit and make it defendable. How
hard is it for a manufacturer who might be listening to this thinking, okay, well, that could be good. I'd love to add a couple points to the bottom line by filling out some paperwork. Is there an opportunity to figure out, just like, for them to think about their business and say, okay, there probably is an opportunity versus that there isn't? And then sort of at the next step, is there an opportunity to sort of either talk to you or to someone else in the ecosystem to sort of understand, is it worth doing before they dig in and do it? Or do you have to go through the whole process and spend the money before you even figure out?
As part of our commitment to the Connecticut manufacturing community, no charge to the initial assessment.
I'm sorry. No charge.
No charge for the Connecticut ecosystem. No charge. We'll come in, we'll bring the expert in, and we'll have the introductory meetings with management, and we'll do the full analysis of feasibility at no charge.
Okay, you heard it here first, folks. I heard free opportunity to get free money.
Yeah,
that's pretty awesome. And Jeff, just to give me a sense, like, how often do you guys find success? Is it like sort of a 50, like a 500 batting average? Is it?
Yeah, I'd say the manufacturing space specifically, at least 50% of the time. The results are, obviously I gave you a wonderful story.
You said it was a home run, yeah.
Home run with the 3.7, but we have had cases kind of average around $1 million. So, 50% applicable in the manufacturing community.
Well, there you go. One out of two chance.
Yeah.
All right. But that was pretty awesome. I'll just say this as a side note, obviously different business, but I've been able to take advantage of this sort of on the IT side.
Yeah.
And it is real. And it's really just as an owner, personally, as exciting when you sort of see it happen, because it does feel like, for once, to some extent, the government's more on your side. Yeah. And that is a nice feeling, because, in a business, to kind of move ahead, you got to invest. And oftentimes you don't know where that's going to go. So to know that some of that investment can get sort of reduced on your taxes, it does feel like a boost instead of a drag down.
It's a huge boost, right? With the interest rate environment that we have today, it's even a bigger boost.
Yeah, no doubt about that. And sort of speaking of boosts, and we'll just do one more topic, because I was worried we weren't gonna have enough time to talk about it. I think we're already like past our normal amount of time. So, but I'll just kind of go into, we talked about M&A, and it's sort of funny bringing this whole episode full circle, because we talked about sort of in the accounting space and the advisory space, sort of the consolidation that continues kind of apace, no doubt about it. Mm-hmm. But you're also kind of not just have been involved in the roll-ups yourself, but you see it on the client side, and there's some opportunities there as well that manufacturers can take advantage of. So I'll let you speak.
Yeah, so I do a tremendous amount of work with mergers and acquisitions. The manufacturing community is exploring mergers and acquisitions on a very aggressive pace, specific to addressing supply chain challenges. They go vertical. They go out and they acquire their vendors. They tuck them in. Now they kind of have full control. They eliminate bottlenecks. One thing, we're all going about tax incentives today, so I'm going to stay there before I lose the thought. The government is your friend in the acquisition environment. You get to actually take deduction on the equipment that you purchase. If the business has a goodwill component, which most businesses and most transactions have, under Code Section 197, getting a little geeky, you get to amortize that for tax purposes over 15 years. It's another deduction. A lot of people don't realize that. Most of the manufacturing community goes out and buys a lot of equipment, and they love that depreciation. They love that immediate tax benefit. In an acquisition scenario, you not only solve supply chain problems, you reduce bottlenecks, but you also get the tax benefit of the acquisition as well. Again, another benefit.
There you go, tax benefit. So, yeah. I know there's a number of manufacturers that have done different acquisitions. We've talked to big ones, we've talked to small ones. So really important as you kind of make those investments that you take advantage of all those tax opportunities.
Yeah, if people don't realize it, like I talk to business owners, they just start to think about acquisitions. There's some that are doing it all the time. There's a lot of roll-up scenarios. Like I mentioned, my footprint's national. I go across the country. A lot of those are private equity owned companies. They bring us where they go, which is great. They're doing the acquisitions for a reason. You know, for your average manufacturer, there's a tremendous amount of enterprise value that can be realized as part of an acquisition as well. One of my clients back in 2012, one of my favorite clients sold because the owners were getting up there in age, 82 and 85 respectively. They were hanging up the cleats.
Yeah.
One of my most favorite clients was at my wedding and my kid's christening. Just wonderful people. We sold the business. We sold it to another Connecticut manufacturer. Every time I see the acquirer, he always comes over to me and says, I always just, the business is doing great. Like he always lets me know, like it was like, cause it was like family. The business is doing great. We're so glad we did that. And since then they've done 5 or 6 other tuck-ins. The reason why companies do the tuck-in is because it becomes very accretive. Sometimes you have excess capacity on your shop floor. You go out, you do an acquisition, you pick up a couple additional product lines. You don't necessarily need the other facility. You can close one facility, bring all the employees in, use your excess capacity, run maybe 2 shifts. It's all accretive at that point to the bottom line because it was all idle capacity.
Well, listen, once you have equipment, the job is to run it. And if you can, 24/7, 365,
Spot on.
you'll get it done. Yep. Jeff, thank you so much for coming on today.
Thanks for having me.
Super appreciate you sharing this. I really think there's a lot of value in here for people that listen to it, and hopefully they'll take advantage of it, whether they reach out to their current advisor, or I know you're available. We'll have you contacted in the notes if people want to reach out. And I'll just say this, there's nobody in the manufacturing ecosystem from an accounting perspective that I've seen bring the level of energy and passion that you do, Jeff. So it's been a pleasure having you on.
Thank you so much. It's so great to be here.
Made in America with Ari Santiago is brought to you by Compass MSP.